Good morning. You listen to FloorDaily.net, and I'm Kemp Harr. This morning, my guest is Bruce Zwicker, an industry consultant. Bruce, how you doing?
I'm doing great, Kemp. Thank you. How about you?
I'm good. It's good to talk to you. I wanted to talk because we're at the end of the first month of 2025, and we're hearing once again from several people that this year is one where it's going to be slow in the front half, and then things are going to be better in the second half. That sounds familiar, doesn't it?
It sure does. Here we go again. I remember talking with you at coverings the last couple of years, and I was always less optimistic than the industry was about what was going to happen. I probably am again, but I am more optimistic than I was in the last 2 years. But it feels like we're trying to find a mythical creature, the unicorn, and we're chasing this thing through the woods. We see glimpses of it, but then it fades away and it's not really there. However, I do think that we will see a better second half. Connor from ITR spoke at CCA, and he used the word mild, and I think that's the right word. It feels to me like we've been talking about, have we hit the bottom, and then the second half thing. So I think we're probably at the bottom here in this first quarter. Seasonally, it's a soft quarter anyways, and we're coming off of a not great fourth quarter. And then we're going to be comping as the year goes on in 2025, comping against some pretty bad quarters. So it seems to me like prices bottom up and there's been some price increases. But the demand side, I think we're near the bottom. But it's really more guesswork because there's not a lot of data that supports that. The ABI just came out and there was a spike prior month up to 50. But, that's a very spiky indicator. It goes up, it goes down, and it dropped all the way down to 44. So we all believe the commercial market is slowing, and it probably is, but it's slowing at a very slow pace. Important, its indications, its guidance for 2025 are still pretty modest in terms of any kind of improvement. And the RMI, again, indicates some sort of mild pace of improvement. So we got the word mild in front of us. We got the bottom hitting now, and we've still got hope for the second half. But when we finally do get a substantial recovery, it'll be driven by interest rates. And we all know that's going to take longer than we would have thought.
I'm a boater, so I use terms that boaters understand, and I call these interest rates, this is a sea anchor. It's like a parachute that's underwater. And we're not going to see, even Connor Lokar said, there's a lot of pent-up demand, but this mortgage rate is going to stay to 6 to 7%. And if people are holding out for it to go back where it was a couple of years ago, it's not going to happen. Connor, though, was optimistic that, existing home sales would pick up just because of pent-up demand and people needing to make a move. We'll have to see if that happens. I've just spent the last 2 months spending time with retailers. And, I was at the Mohawk meeting in December and then with CCA and then just got back from the Shaw meeting. And it's a mixed bag out there. There are some retailers that are seeing some good numbers, some positive numbers. So there's a good chance that, we've hit the bottom. Those retailers that are doing some different things, it may not be because of an uptick in total demand, but at least they're taking share from somebody else, I guess is probably what's happening.
I think that's a perfect conclusion, really. I think there are those who are just doing better than average, and it's not because of the market, it's because of what they're doing. You can look at Floor & Decor, and we'll start seeing earnings coming out here in the next little while. We'll see Mohawks as well in 2 weeks. I think we'll see there's winners and losers, and I think that's very true in the population of dealers. For example, the CCA dealers are typically always do better than average. It depends on who you're selling, what you're selling, and how you're going about it. You could be doing quite well as an independent dealer.
I interviewed Keith Spano at the end of the meeting 2 weeks ago in Orlando, and he was saying their numbers are improving. They've got 900 stores with this new merchandising system in it. That's helping a little bit. And they've got some good computer systems that tell them exactly what's going on as far as point of sale. So it's encouraging to hear that, with CCA and then again, and with some of these Shaw Flooring Network people, they were also seeing an uptick. So that is encouraging to hear.
So we could maybe conclude that we're at the bottom. We will see improvement. It'll be slow and mild. The two things that change everything are interest rates and tariffs, both of which we don't know exactly what's going to happen, but we can suspect that the interest rates are going to take longer. And the thing we would suspect is that the mentality of people who do need to finally move, they're going to get normalized around an interest rate of 6 something or 6-ish. So that's going to happen. Well, when you look at the mortgage rates, it's really mortgage-backed securities. It's not the federal funds rate. And when you look at the home equity loan, the HELOC, I mean, it's around 8-ish. It's related to the prime rate, right? So we can all talk about the Fed's fund rates, but that's not really what's moving the needle. The two things that we really need to see happen for our industry. And then on tariffs, a 10% tariff, what's the effect of that? It's not enormous. What it does, though, is it increases price and gives the domestics an advantage, but not a huge one, really, because they'll probably raise price, too. So what you've got is you've got some inflation, and it slows down demand. Tariff basically will slow down demand for a high-ticket item. People already don't want to spend money on high-ticket items. It just makes that a little bit worse. But the dollars will improve. But those are the two things that really are going to make a difference for us, and those will play out over the next year. We just don't know yet.
We've been cautious about running an article about these tariffs because we don't know how much of this is saber rattling and how much of this is actually going to happen.
Absolutely.
So we'll have to see.
Absolutely right.
Yeah, one last thing before we run out of time. I just got back from hearing some data at the Shaw meeting that was presented by Ernst & Young about the remodel dollars that are going toward flooring. They've dropped 5% in the last 20 years. So that's a real flag. The research is blaming it's the lack of strong brands. It's a focus on price versus style and design. And it's a shift to lower price flooring products. So that's going to be something we really need to focus on and see if we can't get turned around, right?
Yeah, I was puzzled by that. Our floors lasting longer. I think the data needs to be looked at a little bit more closely to really understand what's going on.
They were using the coatings, the paint industry as an example. You know, the price of a gallon of paint has gone up 45% in the last 3 years. And yeah, maybe the consumer used to put in a hardwood floor, which, you know, costs $7-8 a foot. And they can now put in, you know, an LVT floor, you know, for $3 and $4 a foot. So I think there's some of that involved. All right, Bruce, it was great to talk to you. Looking forward to being with you at the end of this month. Again, been talking to Bruce Zwicker, an industry consultant, and you've been listening to Kemp Harr and FloorDaily.net.